Just hope you're having a good weekend. We just ended the month of September and we had a good trading week. So hopefully you made some good profits. Now, just a quick recap about the entire month of September. It was pretty difficult and most of the weeks, I think 3 of the weeks, we didn't really do super well. But this week was a very good week for us and that's where we made a lot of money. So hopefully you followed the signals and you came out with some profits. Let's look at the Forex Factory economic calendar for next week. So right now at the time of recording, it's the 3rd of October. So we are planning from 4th October to 8th October. So next week we have a couple of news events such as the conference, or rather the speech right here. And you have this speech as well. And then after that, of course, we have the NFP, which is over here and over here. So next week is not looking like an easy week to trade again because of speeches and NFP. So you want to be very patient. In a moment's time, what I will do is I will break down the key levels of this currency pairs here and show you the buyers. Now my goal is to shorten this video and change things up a bit. I want to go through it faster so that this video will not take so long. Now, as always, what I'll be doing is I'll be using the MPE trading strategy right here. M stands for market condition, P stands for price level, and E stands for entry. And I'll be using this to analyze the market right over here. So if you have not already gotten it, please go grab it. At the same time, really do appreciate if you could hit the thumbs up button and subscribe to the channel if you haven't already done so. Now quickly, let's move on to DXY. I want to keep this video short so that you can get the levels fast instead of watching a 20 minutes long video. Now, what I've over here is the bias. So the bias for DXY, dollar index, is bullish. Okay, let me just show you why it is. So you have a low here, you have a high, higher low and higher high. So market structure is bullish. That is M of the MPE trading strategy. The next thing that you need is you need P, price level. So right now price is very close to resistance. You just look back historically. This is resistance and price is resisted right now. This is looking like an evening star pattern. So I do expect price to just retrace lower. Wait for price to come back to this key level and then look for a candlestick pattern to go long. Okay, this is a very important level. If this level doesn't hold, then what might happen is that price might just retrace deeper into this level. But bullish buyers for dollar index, you don't want to be shorting just because price is at resistance. Now moving on to euro dollar. Euro dollar, the bias is bearish. It's pretty clear. So this is the daily time frame. You can see that this is the high, this is the low, lower high, lower low. In fact, if you were to look at a bigger picture as well, you have a low here, you have a high, lower low, lower high, or rather equal high, and then lower low. So for this reason, the bias is still bearish. Now the thing that we need is we need price to retrace to a resistance zone. So you just look back historically, you can see that this entire zone of support, I would draw it as like this. I would draw it like that. So what we need is we need price to retrace higher. Ideally, it coincides with this descending trend line and we get confluence. So the last thing that we need is of course a candlestick pattern. It could be an engulfing pattern or a shooting star pattern or a piercing candle. Just wait for a candlestick pattern here and you can take the shot down. Pretty straightforward. Now if this level holds as resistance, then the next level of support will be this recent swing high over here, and you can see just looking back that this was some form of resistance and here was resistance and here as well. So this will be the next level, 1.14221. Moving on to pound dollar. Pound dollar, same bias as euro dollar, bearish bias. Same exact setup. You have a descending trend line. The market condition is bearish because you have a high here, you have a low, lower high, lower low. So go short, do not look to go long. Now we just need price to retrace higher back into this support which was holding for some time. So this is very important support that was broken previously. So I do expect it to hold as resistance. So just wait for price to retrace higher, look for a candlestick pattern and then you short it down. Okay, if this holds as resistance, then the next level of support will be somewhere here. Just switch over to the line chart and you can see that this is the level that I've chosen as the next level. Moving on to dollar franc. Dollar franc market condition is bullish, very easy to see why. You have a high here, you have a low, higher high, higher low, higher high, higher low, higher high, and right now it's looking like a higher low. So we also have this ascending trend line, and I do expect price to just retrace a bit deeper. In fact, if you just look at this swing high right here, if you cannot see this level, just switch over to the line chart, and you can see that this level is actually previously resistance, and right here you can see that it's acting as resistance again. So I do expect it to hold as support with the trend line as confluence. So this is a good setup if we get it. Just be patient, wait for price to retrace towards this level of 0.92546, and then if this level holds as support with a candlestick pattern, then look at the recent high as your profit target. Moving on to Aussie dollar. Aussie dollar, the bias, I won't really say it's bullish or bearish because it's a bit difficult to say right now. So I would say it's mixed. Now, if you really want to be safe and you want to go long on this currency pair, what I recommend that you do is you wait for price to just come up here first, wait for it to retrace here, look for a candlestick pattern here and trade off the inverted head and shoulders pattern. So this will be the left shoulder, this will be the head, and the right shoulder will be over here. This is how I recommend that you trade it. Okay, I don't recommend that you chase after the market now if you do not have experience. Personally, we did trade this week based on this pattern because we see this as a fake out of this low right here. So price closed below and then price closed back above. So our signal that we sent out was based on a fake out play. But if you are a new trader, you're still struggling, then please be patient. Look for the high probability setup, which is for price to come up here, retrace back down, catch the right shoulder with a candlestick pattern, and then you can go long. Now, of course, if price is supported here, then this level will be important because this will be the neckline, and if this level is broken, then you want to focus at this level next, which is the previous swing high right here. Okay, you can see right here that there's a shooting star showing that this level is strong as well. Now, I will send this signal out in the Telegram channel, so don't worry if you do not know when is the right time to catch it. Okay, so please join us on Telegram if you haven't already done so. I will leave a link to that in the description down below. So moving on to dollar CAD. Dollar CAD, the bias is still bullish because we have a high here, low, higher low, and we have an inverted head and shoulders pattern, a very ugly looking one. You have the left shoulder here, you have the head, and you have the right shoulder over here. Now price is in the middle of nowhere right now, so be patient, let price retrace deeper here onto the right shoulder together with the ascending trend line, then look for a candlestick pattern and then you can go long. Now if this level holds, then you want to be paying attention to this level of 1.2743 because it was the previous swing high here, and you can see that price rejected it here and price rejected it here as well. So if you go long here, make sure you take some profit here, and if this level is broken, then potentially you could target this next level over here, which is a spike high over here. Moving on to Kiwi dollar. Kiwi dollar, the bias is bearish because if you were to look at this descending trend line, in the grand scheme of things, you have the high here, the low, lower high, lower low. So this is still a bearish bias, and if you were to look at the intermediate trend or the immediate trend, you can see that there's a high here, low, lower high, lower low, lower high, lower low. Now price is retracing back into this zone of resistance. So previously you can see that this entire zone was a very sticky zone where price really struggled. Now price on this date, 29th of September, closed below the zone, and now price is just retracing to it. So the last thing that we need to take a trade is we need a candlestick pattern, which we haven't gotten yet. So if we see it, then we can go ahead to take a trade. But if let's say price decides to just keep moving up, then you want to abandon this trade idea. Instead of going short here, you want to look for shorts higher, which will be this zone right here. Okay, so this zone will be in confluence with the descending trend line as well. So this is also another high probability zone where you can look to go short. Now if this level holds as resistance, then of course the support that we are looking at is the recent swing low right here. So ideally we could go short here and look to take profit over here. Moving on to dollar yen. Dollar yen, the bias is bullish because you have this big pattern here which looks like a inverted head and shoulders pattern. You have the left shoulder here, you have the head, and you have the right shoulder over here. And this is the neckline. The neckline was broken, and if you just look at the structure as well, this is a low, this is a high, higher low, higher high. So bias is bullish. Now the only question is, price is retracing now. The only question is, where will price retrace to? Will it retrace to the zone of resistance, which will now act as support, or will it do a deeper retracement? Okay, I do not know, and that is why we need to wait for a candlestick pattern. So look for a candlestick pattern either at this zone right here, which is given by this market structure and this structure right here. Otherwise, just wait for price to do a deeper retracement into this ascending and market structure level. If you just look to the left, let me draw it up for you. If you just look to the left, you can see that there is some market structure here, 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 and here as well. So you can just wait at these two levels depending on the price action. Now moving on to gold. Gold is a little tricky. Okay, it's not full on bullish, but if you have to really make a decision of whether it's bullish or bearish, I would say it's more bullish, because this descending trend line has been broken. So this descending trend line is drawn by connecting this high, and you can see that it was being respected here. And on Friday, what we have is that we have price breaking above the trend line, and you can see that the lower wick tested the trend line again. So this leads me to believe that this trend line is valid and is broken because this has broken above and tested it. My bias for gold is bullish, and I expect price to go higher towards this level, and if this level is broken, then this level, which is given by the previous swing high here and this resistance, if this level is broken, then I want to look at this swing high, which is a very strong level. You can see previously that this was the level that resulted in this big sell down. So this is a very important level. Bullish bias for this one. You want to be very careful if you want to go long for gold, because right now this descending trend line is broken, but there is no series of higher highs and higher lows first. So if you really want to be safe, then ideally you want to see something like this kind of pattern. Then you can wait for a pullback to this level, something like this, showing that there is an uptrend, which is a high, low, higher high, higher low, something just like that. Okay. Moving on to Euro Pound. Euro Pound, it's mixed. It's just a big mess. If you just look at this entire price action, it's just a big mess. So I don't want to spend too much time. I just want to highlight to you where the support is and where the resistance is. This is the entire zone of support, and this is the resistance. So if you really want to trade range plays, then you want to look for a long setup at the bottom, and you want to look for a short setup at the top. Again, please be mindful that you need a candlestick pattern. Do not just buy off support without seeing a candlestick pattern as confirmation. NZDUSD seems like it's selling down. It looks pretty bearish on Friday. I do expect NZDUSD to drop further. Let me just clear this out first. So right now price is here. I expect it to retrace deeper into this level. I do think that NZDUSD is still in a bullish trend overall. However, the short term is bearish. So I do expect price to just drop further. If you just look into the sub waves right here, switch over to the line chart, you can see that this is a high, this is a low, lower high, lower low. So the immediate trend is bearish, but the long term trend is bullish because you have a high here, low, higher high, higher low, higher high. So if you want to go short, you have to understand that this is a short term play. You could do something like this. Look for a retracement to the descending trend line, look for a candlestick pattern, and then you take a short down. Okay, this is a short-term play. If you're not experienced enough, please do not do this, because overall the trend is still up. You're trading against the main trend. Now lastly, we have pound yen. Pound yen bias is still bearish because we are still in this same descending triangle. You have the sell down here, you have the pullback, you have sell down, pullback. So this entire pattern is what is known as a descending triangle. It is a bearish chart pattern, which is signifying that the bears are gaining control. So for this kind of setup, what I recommend is that you sell at the top. So just be patient, wait for price to come up higher, look for a candlestick pattern, and then you take the short down. Of course, be patient and wait for a candlestick pattern. Don't just short without looking at the price action. Now, if you get a candlestick confirmation like this, where by the time you get the confirmation, it's already down here, I do not recommend that you take this kind of trades, because by the time you do it, your risk to reward is going to be very bad, because you are selling in the middle of resistance and support, and that's not wise. You want to sell near resistance and buy near support. Okay, in this case, you want to sell near resistance. I don't recommend that you buy at support, because this is a descending triangle and the trend is bearish. So it's better to lean towards shorts than to go long and trade against the trend by buying at support. Okay, so today's video is a shorter one. Please let me know in the comment section down below if you prefer a shorter version where I just get straight into the structure and I give you the levels quickly so that you do not have to spend so much time, right? I really love to hear your comments, your feedback about whether you prefer this kind of shorter videos. I think there's probably 15 minutes. Keep it short, give you the level so that you can take action and note these levels down on your charts immediately. So that's it for this video. Please make sure you grab the day trading guide if you haven't already done so. Link is in the description. Thanks for watching. I'll catch you in the next video.